You were listening to chartingwealth.com for Friday, the 6th of July, 2018. Hope that you had a wonderful 4th of July holiday. Don't forget our book, Charting Your Way to Wealth, is available. Getting ready to go into our 4th printing. We appreciate all the support from the folks who appreciate what we do. It's one of two ways that we have monetized all of our work here. This is, of course, the number one way, that is purchasing Charting Your Way to Wealth. The other is also purchasing our Stock Traders Journal, which is a collection of things we have available for free for everybody who is on our membership list. That is, you're a subscriber and you get an email every day from us, or you subscribe to our YouTube channel. You can see in the show notes every day. You can also see at the website under the show notes at chartingwealth.com links to the daily market worksheet, the weekly market worksheet, and the trade worksheet. We combine all of those into an 8.5 by 11 presentation where we have 3 months worth of those forms in order, from the weekly market worksheet that starts your week off on Monday, Tuesday, Wednesday, Thursday, and Friday daily market worksheets, and also a ton of trade worksheets that help you keep up with your trades and actually has you do an internal discussion as you go through the course of the trade as to why you got in, why you're staying in, why you got out, how you did, and the lessons learned. If you want to supercharge your training, if you're serious about this and you really want to turn what is a dream into a reality, you need to have the Trader's Journal. And again, you can buy them at the website. You can see under the show notes there are links to both buying the book, Charting Your Way to Wealth, and you can see a link at the right-hand corner of the page right now for a link that will take you to a place where you can purchase the book, or you can also buy, or you can buy the book along with Trader's Journal. We have a discount if you buy 4 Trader's Journal at a time. Give you a substantial amount off. That's a year's worth, because again, the Trader Journals are good for 3 months apiece. Fill those out for a year. You will be on your way, I believe, very much to understanding what the market's all about and to being a very serious person when it comes to developing abilities to be able to trade in the market. Folks, that's where we are as far as helping us monetize the site. We so appreciate that. Oh, and don't forget, purchase of the book, you will have the opportunity, you will have for free. We're going to send out around the mid-month, about the 15th of July. We're going to send you our short chart training so that you, and it's based on the 2-hour chart, and we're going to help you go over how to read this 2-hour chart and use it for short chart trading. So very important. That goes out to the people who purchased the book between now and the 15th of July. If you've already purchased it, you'll be on that list too. If you haven't, you need to buy the book. Okay, let's jump into these charts. Everything up for the day for Friday. Everything up for the day there on Thursday as we go into Friday. The S&P 500, the NASDAQ 100, 20-year bonds, and gold. The S&P 500, it is still a down week, however. This is a shortened week, but it's still a down week. Are we going to end up, if Friday's a big day, we might not have the weekly vertical crossover going down. It looked a lot better back before the market popped up 0.78% for the day on Thursday, but we still have a red down candle. Looks like it's trying to cross over going down. Derivative oscillator losing momentum. But what we really want to see with strong crossovers is the derivative oscillator and the price percent oscillator to both cross over at the same time. May or may not happen. We'll see how Friday is for the market. What do we see going on the price percent oscillator on the 2-day chart? It's flat, derivative oscillator losing downward momentum. And of course, we had the 2-day candle ending on the 3rd on that shortened trading day. This is the first day of the latest 2-day candle, the 5th, and we see a green up candle on that 2-day candle so far. So interesting sort of change after we had many days of strong down movement to see things pop over, violate the 2-day trend line. Don't forget, the weekly is still in a confirmed up move until the end of the week. What do we see on the 4-hour chart? It crossed over going up back in the afternoon on Monday the 2nd and has pushed through the 2-day trend line on that 4-hour chart. Derivative oscillator gaining momentum. Price percent oscillator spiking up quite nicely. So we'll keep our eye on the S&P 500. Don't have a trade right now because the 2-day and the weekly are going in opposite directions. So we'll see how the week ends up, and if we do have that weekly vertical crossover going down. We'll call it when the candle is drawn, and that's at the end of the week. What do we see on QQQ? That is the NASDAQ 100. We see a red down candle drawing there also. Derivative oscillator losing momentum. Price percent oscillator not as close to crossing over as we saw in the S&P 500. We go from the weekly to the 2-day chart. What do we see? Not quite as flat. Price percent oscillator still going down. Derivative oscillator looks like it's flattened out, maybe losing a little bit of momentum. We see the latest 2-day candle, green open box candle after a prior green spinning, solid green spinning top. So again, we're seeing some changes in as far as the flow goes with all that downward pressure, at least on the 2-day chart. What do we see on that 4-hour chart? Well, of course, bounced off the red signal line, came off of it in the morning on Thursday, and then moved up even stronger in the afternoon. Derivative oscillator gaining momentum, price percent oscillator heading up. So we'll keep our eye on things and see what we see as this week ends. If indeed we have weekly vertical crossover going down, doesn't look so much, but if it's a big down day on Friday, that could occur for the Qs also. Okay, now let's keep moving through these charts. We're going to go to 20-year bonds. They've been in a confirmed up move since they crossed over going up back on the 25th of May. Had a big up week following that, the 1st of June, then sideways for 2 weeks. Things have been going up in earnest since the week ending the 22nd of June. So we're going into the 3rd week of up movement, price movement above the weekly trend line, stair steps going up on the derivative oscillator, price percent oscillator spiking up nicely. We look at the 2-day chart. What do we see? Price movement above the 2-day trend line and above the weekly. We see the derivative oscillator gaining momentum, price percent oscillator headed up on that 2-day chart. And on the 4-hour, we can see things pushed back over going up in the morning. We talked about that possibly occurring. Derivative oscillator, however, hasn't popped over going up. Like to see that, but it is losing downward momentum, which is a good sign. And we'll just continue to watch. Maybe some of you jumped in after that morning pop up and got in the afternoon. Not a bad move. Again, looking at the fact that your price movement's still well above the 2-day and the weekly trend line. So again, during this whole time period, as long as we've seen price movement above the 2-day and the weekly, you've had an opportunity to get in and to potentially stay into that move, and it has moved up quite nicely. Again, it's part of the magic of those weekly vertical crossovers, and then continuing to follow those and see when the 2-day and when the 4-day give the opportunity to hop into those trades and ride them. And we love to see good, solid trend lines, which we're seeing on the 20-year bonds. Okay, lastly, we go to gold. Oh, and by the way, 20-year bonds up 0.29% for the day. The Qs was up 1.24%. Gold up 0.34%. Now, gold has been in a down move in earnest since it really started spiking down back on the 27th of April. And but for 2 weeks since then, it has been going down, down, down. These last 3 weeks in particular, price movement is, of course, below both the weekly and the 2-day trend line. Price percent oscillator gaining, spiking down. The derivative oscillator heading down, also gaining downward momentum. We look at that 2-day chart. We see that it's actually flattened out with this latest move and has breached a very long-running 2-day trend line on the 2-day chart. Derivative oscillator losing downward momentum. Price percent oscillator less than flat. It's actually headed up a little bit. We go from there to the 4-hour chart, and what do we see? Of course, it crossed over going up back on the morning of the 3rd, Tuesday the 3rd, in that shortened trading day, and it's really just sort of held right there at the 2-day trend line. So keep our eye on things. Again, if gold sort of brushes that off and then starts heading down again, crossing over, going down, that pullback may give you the opportunity to actually jump into a down trade. So we'll wait and see. We've been looking for the ability to hop into a down move on gold. If you're saying, why would you want to buy something that's going down? It's called short trading, potentially purchasing a put or an inverse fund. It's a little difficult with inverse funds in gold because the bid and the ask, the liquidity is so far apart. It's not very liquid, but puts are possible. And of course, we'll have more training on those options in the future. But again, you want to have that special short chart trading. Again, buy the book, Charting Your Way to Wealth. We always love to hear from you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.